I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Really good to have you here. Always good to be speaking with you.
Likewise, Charlotte. Thanks for having me back.
Okay, so we have a lot to get into today with gold and some of the other metals, but where I thought we could begin is we talked last time about a couple of conferences that you have coming up, and they are now even closer than they were before. So briefly, if you could tell us what we need to know about those events that are coming up very soon.
Yeah, so I kind of got into this part of the business about 2 years ago, and I enjoy it. It's a way for me to meet clients, investors, like people listening to your show right now, and also to build further relationships with companies in a more relaxed setting, right? Because CEOs are so busy all the time, and we usually have 3 to 5 minute calls, and to be able to have a drink or a meal and just get to know each other better is always great. So I like to keep it real simple at my conferences, Charlotte. We're trying to introduce those investors with CEOs directly and have them ask questions that are relevant to them, rather than just have the CEO go through a 20 to 30 minute pitch on like a 40-page presentation deck. It's more about listening to the client, understanding what the investors' questions are, and then answering those questions. Because our CEOs that attend these events are super bright, and sometimes because they have a more technical background, they get a little too technical, and clients then provide feedback to someone like me and say, hey, I loved the conference, but I was it's a little bit over my head, right? Like, it's just, the stuff needs to be presented in a better, more understandable format. So that's kind of the vibe at both of my events. We're considering them networking events with that one-on-one meeting kind of format, if you will. So there's no booths. There's no company presentations for 20 minutes. We've eliminated that. And we have a presentation day where CEOs can talk on a gold panel, a silver panel, a critical minerals panel. So it's not that they don't get the chance to talk, but it's more in a controlled setting, if you will. It's not just pitching their stock for 20 minutes. It's what do you think about gold? How is your stock positioned? Are you a producer, developer, explorer? So that the average client listening, like your audience, can get a lot out of it.
Okay, well, that's really good. I always love to see new formats when it comes to events. So these are coming up just next week, and we'll have the details in the video description in case there's anyone who could sneak in there at the last minute. So thank you for going into that. And
Sure.
now we'll get into talking about what's going on in the gold sector, because there's so much happening. We spoke not too long ago, but even since then, we've seen gold get to that 3,500 level. I think that happened since our last conversation. And of course, now it's pulled back, but still historically high. So for you, when you're looking at gold, how are you feeling right now? Do you think gold needs to take a little bit of a breather at this time?
It's possible. I mean, I wouldn't be surprised to see it take a breather. We're recording this right above 3,300. So to see a 3,100 to 3,300 gold price somewhere in there doesn't surprise me at all. Remember that the gold to silver ratio right now is 102, which is just simply an ounce of gold divided by an ounce of silver, right? And when you get to 90 plus, as we've talked about before, that's unusual for silver. Silver will play catch up. I think that could happen where silver plays catch up and gold just sort of trends for a while. Like, that wouldn't surprise me at all. And by the way, gold trending at 3,300 or 3,100 would be amazing for earnings for this upcoming quarter. We just saw earnings announced over the last 24 hours by a number of companies. Really good earnings from Coeur, CDE, Pan American, PAAS, really, really good numbers. And these are both primarily silver companies, right? Which is what excited me about today's trading action, is that it's now finally showing up in the numbers. That, our all-in sustaining cost is reasonable enough that even with silver, not outperforming at $32, we're still killing it, and we're still going to be a viable company. And so we can talk about silver in a moment, but as for gold, gold just continues to have a bid. It's amazing. Almost every dip is getting bought, and that's really bullish.
Maybe for gold, just before we move on to talking about silver, if for gold we could look a little bit more closely at those support and resistance levels, because you always do a pretty good job, I think, of outlining those.
Sure. Yeah. So obviously 3,500 would be resistance right now in the near term. However, what's happened since our last recording is that the big banks have upped their gold targets, which is, again, very bullish for anyone listening because and I said this before on many shows, but I'll say it again. I think a lot of listeners are contrarians, right? I'm a contrarian too. So your average response is, well, hey, why is JP Morgan now talking 4,000 gold? Didn't they get fined, tens of millions of dollars by manipulating gold and silver? And the answer is yes, they did. So isn't that bullish? I mean, you have to look at it like they're coming around to our narrative, which is huge. And you have the biggest bank in the world at Chase, being JP Morgan, talking up 4,000 gold. That's not a bad thing. So I would just say, my advice to my clients is don't be so contrarian that you're missing the narrative here, which is Bank of America's at 3,500, UBS is 32 to 3,500, depending on, who you listen to. Goldman Sachs came out at 3,700 not long ago. And these are targets over the next 6 to 12 months, Charlotte. So this isn't like 3 years down the road. So it's very, very bullish to be hearing 4 of the top 10 institutions, I would call them, out there calling for such a high gold price. So that's 3,500 on the resistance side. On the support side, our support level is somewhere like around 2,800. Our floor keeps rising because the market is just overvalued in our view, like the broad market. So we think that we're due for some type of pullback in the NASDAQ and the S&P. We haven't been very correct in calling that because this last rally really surprised me. April 21st, when Trump said, publicly, hey, I'm not best friends with Powell, but I really didn't want to fire him. The market loved that, right? And I don't believe it. In fact, you can look at the news today, and Trump went after Powell again post-Fed. So, I mean, we've been saying through our newsletter and calls with clients, that's a temporary thing, right? If we don't get rate cuts, Trump will come after Powell again and cause more chaos in the markets. And so our floor is more like 2,800, but that big round number of 3,000 might even hold. So, in this range here of 3,000 to 3,300, there's probably some buying to be done if you believe in the big banks and what they're talking about.
Yeah, it's all really interesting to look at it. I think you're right. People in this sector are just not used to being a little bit more in line with those big banks. So I think similar question for you on silver, the support and resistance. We were talking before we turned the camera on about the frustration with silver. I know a lot of people want to see it catch up. What are you seeing there?
Yeah, silver is a huge position for us, but that position was built mostly many, many years ago and added to in 2020 during COVID. I got on it pretty quickly. I mean, with the February, March of 2020 pullback, we were buying a lot in April of 2020. But then we didn't buy any silver, Charlotte, in 21, 22, or 23. We started to buy again in 2024. We started our first purchase at $24 on the nose, then again at 25. Then somewhere between 27 and 28, and then again at 30. Once we broke through 30, that was major resistance for 11 years. So that was a breakout moment, right? And we haven't bought since. We're thinking about buying more if it dips below 30, which for a nanosecond it did after the Trump tariffs, right? In early April, it dipped into the 29s. But now we're recording this at 32, and 32 is sort of like you're in the middle, right? 30 hopefully will hold. That was major resistance for many, 11 years. So to me, 29 to 30 should hold in a bull market. And then 35 is your major resistance point, no question, because 35 failed just this year, and it failed pretty miserably. Like it was between 34 and a half and 35 and just immediately backed off. So we need to get through 35 now. But the good news is we got through 30. We got through 32, which was problematic last year, and then 33. So now we're moving towards 35. We'll break through that this year, I think. We'll break through 37 or at least test it this year. And then there's not a lot of resistance until 40 and then 50, which is the all-time high.
Okay, I like that you remind us of the good news because how soon we forget that those good things have happened. So, all right, that's what we'll have our eye on for silver. And you already started to talk about the Fed meeting, which we just had. So we heard a little bit of your thoughts on that, but curious to get any other key takeaways. Of course, interest rates stayed the same, which was widely expected. Anything else you'd pull out from the meeting or from Powell's post-meeting comments?
Yeah, it was pretty steady meeting, and Powell did a great job in the press conference of not really giving anyone any view of like what the future holds, which I thought would create some kind of animosity. Well, not animosity, but more like uncertainty, right? And today's action in the broad market was quite good. So he must have, I think he threaded the needle really nicely, and the market responded that way today as a result. But this is temporary. I mean, the Fed's got serious problems now that they are basically telling people, hey, we're still talking maybe 3 cuts, but to us, it looks more like 2 right now. If you look at the dot plot and you look at the CME website, which kind of gives you some more information about rate cuts coming down the pike. So our next meeting is June 18th. When we recorded last time, Charlotte, which wasn't long ago, in March, I believe, that was about a 45% probability of a rate cut in June. Now it's showing 28%, right? And I would argue it's probably going lower now after the Fed tomorrow, yesterday, probably not higher, unless we get some data to support that. So, if you're talking 28%, that's not a really confident number that you're getting any type of rate cut June 18th, which I think the market would get really unhappy with because, we've been talking all along throughout the year that June was sort of a given, right? So if they don't get the cut in June, then the Fed might have to do an emergency cut in July, August, or September if, something unravels in the economy. I mean, you saw what happened with India and Pakistan just this week. Like, I mean, that came out of kind of nowhere. And so there's different things that can affect markets in addition to the obvious, which to me is tariffs. I think the real talk right now is tariffs. And like, it was interesting to see Mark Carney and Trump, just a few days ago talking, because I know a lot of your audience is Canadian. And when Trump was asked very directly, like, would you be willing to negotiate? The answer was no. And there was no follow up. Like, it wasn't like no and blah, blah, blah. It's like, no, we're not going to negotiate. I think that's going to be the same kind of rhetoric you see when Bessent meets with China later this week. I don't see anything positive coming out of that except spin, which to me is fluff. Like, you have to have actual stuff happening, like you saw with the UK and the US today, right? That's definitive. That was the lead article that drove markets higher, right? So when you see definitive stuff, sure, that justifies higher prices in the broad market potentially, but not talk. You need to see action.
Yeah, I was going to ask you about the whole tariff situation, which continues to be very interesting because we did have that US UK deal today, and I had it in mind to get your thoughts on, okay, are we heading toward maybe some kind of dissipation of the tensions? But it sounds like no, because there's still so many other places that the US is going to have to deal with. So anything else there that you would highlight?
Just again, that this is the first of hopefully a series of resolutions, but those resolutions will take months, not weeks. And so, like, I think this is an overhang on the broad market for months, and Trump is not going to give up. Like, it's just not in his DNA. So he's going to get what he thinks he deserves for the U.S., and that's why we're overweight U.S. mines. I mean, that's, this about us. We've been saying this for probably 18 to 24 months on your show. We said it more forcefully last year after that Biden Trump thing in June, where it was just like, man, this is not going to go well for Democrats. Like, I mean, it wasn't like I was just an observer of that, like everyone else, right? And any observer of that was like, wow, this is kind of one-sided at the moment. And then Kamala Harris, fought for the party, and it was closer than expected, but Trump still prevailed. And so we put many trades on between June and November 5th that were, in U.S. projects. We'll talk about some of them today, like Stillwater Critical, PGEZF. They're in Montana. We bought more Paramount back then. Rachel Goldman's stock out of Oregon, which is PZG. We bought a series of names to complement our portfolio that would be something that would outperform in a Trump victory. And now Trump has sort of exceeded my expectations, at least in terms of his talk since the executive order in March, right? I mean, the executive order talked more about critical minerals and gold and silver, but still, it's very, very good visibility for the mining sector and for investors.
Okay, and we'll make sure to get your updates on the mining stocks, but just one more question before we go there.
Sure.
I'm wondering, in this context, we've had a lot of new developments since we've last spoken. If we could get your updated thoughts on the U.S. economy heading forward in 2025.
Yeah. So, as I said, it's choppy, right? You have to literally wake up every morning in a Trump world and look at the news flow because things change quickly. I think anyone who didn't believe that now believes that after April 2nd. We saw on Liberation Day, for 5 days after that, Apple stock was down 23%. Apple, not like some random tech stock. AAPL is the ticker. Take a look at it. 23% is scary for most investors to lose in 5 business days, right? So it's rebounded beautifully since then, but you don't have a crystal ball in early April to know this, right? And so that's what the average investor is going to be faced with in a Trump world is volatility. And you have to be able to sit there and say, okay, if I don't know what I'm doing and I'm scared about stuff, you need to align with a professional like me, financial advisor, someone else in your life to help you get through those moments, right? Because now you can look back, hindsight is always 2020, and say, man, I should have held Apple, right? I should have bought more. But it wasn't clear then. And that was a month ago. This isn't like a year ago. So this is the kind of world we live in where, the broad market is going to produce returns, but it's going to produce it more choppy. Like if you look at the S&P and NASDAQ in 2023 and 2024, you could pretty much throw darts, sit back in your chair and relax, right? Like that's not the environment we're moving towards.
Okay. And with that context, we can move on and take a look at some of the, I think, first gold and silver companies that are on your radar. Which ones would you want to highlight for investors at the moment?
Sure. So we talked about 1911 gold last time. We talked about Next Gold last time. Both of those are in Canada. I'll give you another one in Canada that I think is getting unfairly beaten up. Triumph Gold. Don't think I've mentioned that on your show before. TIGCF in Canada, the States, TIG in Canada. The reason I mention it is I talked to John Anderson for the first time about 6 to 12 months ago. And as you know, Victoria Gold was a big problem for the Yukon earlier this year. When I talked to John, I said, how close in proximity are you to Victoria? And he said, not close at all. Like it's not an issue for us, but we're still in the same region. So we're getting beaten up as a result, right? And so as a value manager, I love stories like that. It's terrible for someone like John and for the company, but it's an opportunity for investors to make that phone call and to say, is this a Victoria type situation? Absolutely not. They're nowhere near production right now. But what got my attention was in March, following that call, they raised about $2 million. And then I called them again and I said, what are you planning to do with this? Because you guys haven't, had any news flow for like a year. And he said, we're going to start drilling. I'm going to, dust this project off and we're going to start drilling. And I'm like, okay. And that's when we started to buy it, because when a stock doesn't have news for a long time, Charlotte, like that, and then, it's a gamble. It's an exploration stock, right? But it's not high price versus the peer group. And I think John's a good leader. When he started to tell me about his position in the stock, which is very large, Michael Gentile, who's a very smart investor, has a big position in the stock. You start adding up Michael, John, and 3 other entities, and that's about 40% of the float. So that's something else I look for, is 30% plus of the stock owned in good hands so that they don't get taken over cheaply. So that's one. Let me think. We mentioned U.S. Gold last time, USAU. That's done really well. Yeah, so let's pivot over to silver because I think I've talked heavily about gold last time. Aftermath silver, I've talked about in your show numerous times. It has really worked because we talked a lot about it at 14, 17, and 20 cents, if I remember correctly, in last year in the US pricing. The ticker is AAGFF and AAG in Canada. The reason I like this is it's not just silver and copper, it's manganese. And manganese is a critical mineral, which we will talk about more in a little bit. But manganese is so hard to find in a 99.9% battery grade position. A lot of manganese is less than that and therefore less valuable. So Aftermath's manganese is that 99.9. That was released in February of last year. Since then, Michael Williams and Ralph Rushton went to present at Beaver Creek in September of last year and got to sit down with Eric Sprott and a bunch of bigger investors. And Eric literally immediately, like a week later, put another $5 million in the stock. And then in October to follow that, he put another $10 million in the stock. So, Eric now owns 23 to 24% of the entire company, which is rare for him. He doesn't really do a lot of 20 plus deals. He does a lot of 10s and 5s and 15s, but not 24. So, that got my attention as well. We bought more last fall as a result of that. And now the stock's at 33 cents US. So it hit 50 cents US following Eric, right? So that's the kind of stuff you look for as an investor. Big money came into the stock following Eric. Then it faded during tax loss season. Then silver started to rally this year. The stock goes back up, and now it's coming back down. It's just a natural ebb and flow. But nothing's changed, right? They're cashed up. They did have a warrant overhang on the stock, which just expired May 3rd, which I think is important in pointing out. Because if someone looks at the chart, they might say, why is this under pressure the last 2 weeks? It's just people, exercising warrants and possibly selling stock into the market. That's pretty much done now. So that's why we're getting more interested. We actually just bought a little more at 32.5 this week in US pricing. And lastly, I'll give another silver name there that people may not know about, Zeus Mining. Zeus is a proximity play for us that we found in Idaho, which is the eighth best mining jurisdiction globally. So Idaho is really, like some U.S. states, really making a move towards being more accommodative towards stocks in terms of permitting. And we like that Dean, the leader of this stock, is an experienced geo. So he staked a lot of land very, very cheaply for the stock and didn't have the cash to drill right out of the gate, but now they do. And so they're going to be drilling this summer. What's cool is that they're drilling alongside of a huge discovery in 2023. So in 2023, Hercules, you may have heard of, basically had many, many good hits right near them. They're like a handful of kilometers away. So if you look at a map, like both are going to be drilling this summer at the same time. So I think if either of them are hitting, it's going to help the other stock. That's just my thinking. And both teams are pretty deep at the geology bench. So we like that one. It's trading at 11.5 cents US. Again, these are such like low prices that with gold at 3,000, or at silver at 32. I mean, if you get 3,332, you have the opportunity to really do well in some of these juniors if they start producing, right? And even if they have some permitting news, right? Like that's why we like Mexico too. Sonoro Gold, just to mention lastly, is one of those permitting plays for us, like SMOFF in the States. Stocks at around 8.5, 9 cents US. I talked to John Darts, the chairman, about a week ago, and he said to me, look, Mexico's having a bunch of meetings in June. That's next month. It's not next year. We think we're going to be in line for a permit sometime in probably Q3, right? Which would be post-meeting. And then it's only 10 to 12 months for us until production, right? So yes, the knock on it, it's a smaller deposit. It's not a huge deposit. But I think in a hot market, they could either raise money to drill and find more gold, or they could simply produce, build the mine, do what they're going to do, go into production. That's going to take about 10 to 12 months from permitting, which is very, very short time. And then as you produce gold, you'll develop cash flow, and then you can create more, you can do more with the deposit and grow it. So I think there'll be over 1 million ounces by next year, but it's high grade ounces, right? So it's a very low risk stock at 8.5 cents. That's sort of been we've been entering the stock between 7 and 8.5, and it's trading right around 8.5 right now.
Okay, really good updates on the gold and silver side. And I can see us though already veering into the critical minerals angle with the manganese. So we'll go over to critical minerals right now, which there's a lot of interesting things happening there in the US. Before we turn the camera on, we're talking about some fast tracking that's happening there. So there's real things that are moving. So always curious to get your updates on some of the companies that you're watching in that arena.
Sure. So, I was an advisor to the Critical Minerals Conference in Washington, D.C. last year. It was really well done. 55 companies attended, a couple hundred, investors. And the takeaway that I heard over and over again from CEOs as I followed up was, A, Washington, D.C. was a unique, place to have a conference. And B, I got to meet all of these constituents that I wouldn't have met in other parts of the world, right? And that now has helped certain companies in positioning for a Trump world. I'll give you an example. So Stillwater Critical, PGEZF, we just mentioned earlier, it's PGE in Canada. I've known Mike Rowley for about 4 years. I got interested in the project and literally cold called him because their project in Montana is connected to a major. So that major is called Sibanye, SBSW. And I said, why isn't Sibanye just going to buy you? Like, I mean, what's prohibiting them from buying you? Like, this whole project looks beautiful. It's very large. It looks like a Platreef type deposit you'd see in South Africa. And he's like, we're not going to sell it at rock bottom prices. We're going to wait and try to, build this out. And then since then, he's formed a relationship with Glencore, which is a top 5 commodities player. He sold about 15% of the company to Glencore. So Glencore is a major investor and obviously a potential suitor down the road. But right now they're a partner, and they're not a majority partner to where they would have like a say, which I like, right? Because they have a say, but they don't have like the ability to make a hostile, right? And that is something I'm always concerned with some of these juniors, is that they get bought out too soon. As an investor, I want to take the ride, from where they are now through the Trump permitting, expedition, if you will. And so just last Friday, that project, which is called the Stillwater project, got fast tracked by the U.S. and it really surprised me. But Mike Rowley did a great job. Neil's team at Sibanye did a great job. These guys got it done, and they got in front of big money. And the U.S. is going to write checks this year, and it's going to surprise a lot of people as to how much these checks are going to be. You and I talked about this in December with Fireweed. Remember that? Fireweed was getting $35 million. That's FWEDF. And I was like, this is the beginning of some big things, because I thought they might get 20 or 25, but 35 surprised me. And now you're starting to see these little companies like Stillwater where, if they got 10 or 20 or 30 million bucks, it's like game changing. That's like their whole market cap, right? Like it's like to get a check like that is crazy. I just saw this with a couple of critical minerals companies and rare earth companies recently. They're talking about, $50, $100 million checks, and these are really small little companies. So it's almost like Trump has created this executive order in March, and then he followed up April 15th, kind of doubled down and said, I want all this information on my desk. I want to know where we have strength in our country. And that's why we've been overweight so many of these areas. We've talked about Guardian Metal on your show, which is GMTLF. They have 2 nice projects in Nevada. They've done everything right to this point. They haven't blown up their share structure. They've been very methodical about, taking that one deposit in Nevada and then buying a second one. So they've got a real strength in U.S. tungsten, which is going to be huge for them, I think. American Tungsten, also in Idaho, a state that we like. That one's DEMRF and TUNG in Canada. they've just appointed a new CEO, a guy from my background in asset management. He worked for a big mutual fund and ETF shop. And then they've taken 2 new board members on this week. Like, I mean, these guys have the kind of experience when you look at their resume that you're going to look for to position with, you know, someone like Trump's White House to say, hey, we deserve a check and here's why. And that's the kind of stuff that most investors are really still missing, which is unbelievable to me. That I guess there's enough distraction with Bitcoin and tech and real estate and whatever, insert whatever here. But we're making a lot of money in these stocks, and we intend to make a lot more this year.
Yeah, there are so many Trump announcements. I wouldn't be surprised if people miss some of them on the critical minerals angle, but definitely it sounds like it's a place that people want to be paying attention to. So very good to go over that with you. And on the company side, I've got one more question for you. We
Sure.
had a viewer write in on the last interview asking for an update on Angkor Resources, which is one that I think we talked about a while back. So if we could learn what's going on with that company.
Yeah, sure. We actually took our position up on Angkor pretty substantially in Q1. We were at a 0.8% weighting, and we're about 2.4% as of March 31st. So we tripled our position. The reason being was their March 12th news, which talked about their relationship in Cambodia, where they could basically take up energy production. And they signed a 30-year agreement, 30, not 3. So, you know, I talked to Delaney Weeks, the CEO, and I said, how meaningful is this for you? I mean, you've been doing this a long time. And she's like, this is a potential game changer for the company. And yet the stock really hasn't done too much, again, because it trades pretty thinly. And, you know, it's amazing in our sector, Charlotte, how whether it's energy or mining, sometimes it takes weeks for things to catch on, right? It's unbelievable. So the stock was probably around, I'm just guessing now, 12 to 13 to 14 US cents when that announcement happened. Stock did run up to 0.194, so it ran above 19 cents on some decent volume. But as we sit here today, I just ended up buying some more last week. It was trading at 0.128. It's like, that's the beauty of our sector, is that you get these opportunities to come back to you, right? We just talked about that with Aftermath, right? Where Eric Sprott comes in, everyone jumps in and drops what they're doing and pays ridiculous prices. And then the stock comes back down to earth and no one wants it anymore. It's like, okay, but I mean, that money was real. so you have to like say to yourself, maybe don't buy all of your stock at once. That's what we've bought Angkor, I think 10 times. We've bought Aftermath 12 times, you know. We don't buy it in one shot because markets are markets. Things move too fast these days. Professionals get it wrong all the time, including myself. Clients will absolutely get it wrong a lot of times, you know, and so you have to say, okay, maybe I got that one purchase wrong, but it wasn't everything I wanted to invest in the stock. So you have some dry powder. And so that's how we kind of treat Angkor, being an illiquid stock. And KOF is one that we continue to bid on, but we don't put all our eggs in one basket on one particular day.
That's a nice lesson, I think, on your strategy and how you approach that. So again, really good to go into that. And I think for people who are watching, if they do want to hear about a company that you mentioned in the past, drop a comment and we'll try to bring it up in the next round. So always think it's good to come back. All right, I think we've covered a lot of ground today, and I will let you go, but do you have any final thoughts that you would leave investors with at this time?
Well, earnings were really good for mining stocks in general. Agnico in late April, Newmont in late April, both had good reports. Barrick this week, not bad. Pan American, really good. Coeur, as we mentioned, CDE, really good. And so these are major components of GDX and GDXJ, right? And those are the main 2 ETFs in our sector. So that's a really good thing. As producers are putting up good earnings, that should be a sign for you as an investor to say, A, I need to buy some more companies that are producing like these, or B, I need to find the next companies that are going to be producers. And many of those are ones that I talked about today. Angkor is going to be producing more oil and gas, even though they are currently producing some, right? Companies like Stillwater that's going to be a couple of years from now. They're not producing anything, right? So they're in a different part of the cycle. But it's important to look out and say, in a hot critical minerals market, will they even be a company by the time they produce? I don't even know. I mean, I think that they have people circling them and obviously looking at what they're doing more closely now at the government level, right? So I don't think some of these juniors are going to be around as long as people think. I wish I was wrong, but the time to buy this stuff is now. Like, you have to be putting positions on some of these juniors and just, building a position over time, as we talked about, as opposed to just trying to find the perfect entry point.
Okay, well, I think those are very good points to end on for everybody. So thank you so much for coming on to go over gold, silver, critical minerals, all really good information. Thank you very much.
My pleasure. Thanks.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.